Good evening and welcome to Markets Today. I'm Sonia Shenoy in the Mumbai studio, and joining me from the Delhi News Centre is Surbhi Upadhyay. It was quite a lackluster start to the week, you'd have to say. After 2 weeks of a sell-off, the markets did not manage to recover. In fact, the Nifty was struggling below that 8600 mark, and there was quite a bit of damage done to the MIDCAP index. So looks like, Surbhi, we'll have to be a little more patient before this market recovers.
I don't know if it's an end of the financial year jinx, Sonia. I think we'll have to wait, as you're saying, a couple of days to figure that one out. Let's start with the top stories. A negative start to the week on Dalal Street. Bulls remain on the back foot as the benchmark indices end 0.2% lower. The Nifty ends at 8550. The Sensex loses 70 points. No let-up in selling pressure on bank stocks. IT and oil and gas shares also lose ground.
And broader markets see plenty of pressure, with the MIDCAP index falling almost 1%. Amtech Group shares like Amtech India, Amtech Auto and Ahmednagar Forging fall between 7 to 12%. Sugar stocks trade weak on as sugar prices fall to 5-year lows. Glenmark Pharma falls over 4% as the Delhi High Court has stopped the company from selling its diabetes drug.
And JSPL shares tumble 6% in trade as the government rejects the company's bids for the Gare Palma 4x2 and 3 as well as the Tara coal blocks. The company moves the Delhi High Court to challenge that decision, claiming its bids were very competitive.
All right, those are all the top headlines, and here are the experts that we have lined up for you on the show tonight. Manish Gunwani of ICICI Prudential AMC will give us his outlook for the markets. We'll also get you the managements of JSPL and JSW Steel to talk about the coal block auctions and the MMDR bill, respectively.
Okay, so before we get you all those viewpoints and the analysis, let's start first with the action itself. A quiet start to the week on Dalal Street. Bulls were on the back foot yet again as the benchmark indices traded in a tight range throughout the session. Let's now go across to Anuj Singhal for a more detailed analysis of what really went on there. Anuj.
Well, a low volume day today, but the key was that the markets were again a bit of sell-on bounces. So through the day, the minor bounces were sold into. And what was more disconcerting for the bulls was the way the mid-cap action shaped out in today's trade, with the advance decline ratio clearly in favor of the declines and the mid-cap index underperforming quite a bit. A lot of mid-caps falling by the wayside, and the bank Nifty again continues to underperform. Today also, the bank Nifty was down about 1% and is now down 12% from top. This really has been the correction led by the bank Nifty. Let's talk about some of the stocks that led the market down today. In terms of heavyweight stocks, we had ICICI down 1.5%, Infosys down 1%, and Reliance down 1.5%. These were the three major drags on the index. Apart from that, IT stocks so far, which have been doing rather well, today underperformed. So stocks like Tech Mahindra, HCL Tech, Wipro, they were all lower, 1 to 3% in trade. Some other prominent Nifty losers included Jindal Steel and Power for all the wrong reasons. That stock was down about close to 7%. KN was down 3% and Bank of Baroda was down about 2%. Most of the banking stocks were down. On the gaining side, NTPC, that was one stock that stood out, up 3%. Hindalco was up 3% as well, and Mahindra was up 1%. Finally, in the mid-cap side, some big losers in trade today included the Amtech Group. Amtech India was down 11%. Alok Industries down 8.5%, and Sri Renuka down about 5%. But there were some winners as well in today's trade. Stocks like OnMobile, Geometric, HEAVIES, they were all gainers between 4 to 16%. So the first day of expiry week is gone. 3 more days to go, and really the key would be, can the Nifty hold 8500, or will the bears have one more attack on the Nifty and take it below 8500?
Oh, indeed. Thanks so much, Anuj, for that. Well, you spoke about the Amtech Group and you spoke about Amtech India, but there were other stocks like Ahmednagar Forgings, Amtech Auto as well that cracked about 7 to 9%. Not just that, the entire sugar pack was under quite a bit of pressure. So names like Bajaj Hindustan were down about 8% after sugar prices fell to 5-year lows. And then you had a lot of good quality mid-cap gainers over the last many months that came in for profit taking. So Syntex was one of them. Names like Tech Mahindra under pressure as well, Unitech, Lanco Infra were all a couple of other stocks that fell quite a bit. But on that note, let's get in one market voice. Manish Gunwani, Senior Fund Manager at ICICI Prudential AMC, says that 2015 will be a year of consolidation for equities and we may see a couple of quarters of sedate earnings. Take a look.
This is a year of consolidation, maybe a couple of quarters or so, because I think broadly what's happening is you have a great macro but the micro is not matching up right now. From a 2-3 year perspective, we still think equities are a great asset class. But what you just might see in between is both because of domestic factors or because of global factors, you could see some volatility in next couple of quarters. On an average, I think they're saying that bottom is past, but you're not getting a great sign of growth coming back. So I think we could have a couple of quarters of relatively sedate earnings. Cross-currency impacts are kind of playing a small headwind for earnings because the currency has been pretty strong over the last 1 year or so, especially against the euro, yen, etc. So whoever is exposed to that region, which includes IT and pharma, which are the big export sectors, those could obviously face some headwind. So,
okay, well, those are some cautious views coming in, but now for all the action from the futures and options space today, let's go across to Nigel D'Souza. Nigel.
Well, another weak trading session for the Nifty, but now the Nifty is moving towards that support zone of around 8,500 order. But in today's trading session, looking at the options data, call writing made you money again. So the 8,650 call as well as the 8,600 call, traders are looking to eat into that premium, so they're writing both those two strikes. But the downside seems to be capped because the 8,450 put as well as the 8,550 put. Now, if you were buying those particular strikes, you would make no money whatsoever because there was writing at that level. And though the Nifty ended in the red, you didn't make any money if you were buying both those two puts. The 8,500 put though, that's a crucial mark because that's where the highest open interest lies on the put side. Individual stocks that were in focus. BHL was a stock that was getting sold into in today's trading session. The stock is down by close to around 10% for the month itself, and in today's trade, that stock was getting sold into. JSPL open gap down, it was down close to around 10%, but there was some short covering that was seen, so the stock recovered from the day's low to end with a cut of around 7%. Idea though was getting sold into in today's trade. Bharati on the other hand, that stock was seeing buying. Intraday we did see some unwinding, but towards the end of trade we saw some renewed buying coming into that counter as well. From the broader markets, HEAVIES is a stock that stood out. Big buying was seen on that counter, while the banking space has been struggling, and Allahabad Bank was getting sold into.
Nigel, stay on with us because we have to talk to you about the big story of the day as well. Let's fill in our viewers first. Jindal Steel and Power plunged in trade after the government rejected 3 successful bids in the recently concluded coal block auctions. These include 2 Gare Palma blocks and the Tara coal block. We spoke with the management earlier and they maintained that their bids were very competitive for all the blocks.
Well, we did get a communication from the government on Saturday morning saying that our bids have not been accepted by them. It has come to us as a shocker because we thought we have put in bids which are very competitive and they bring a lot of value to the government both at the central level as well as the state level. So we are completely at a loss to understand what is the basis for rejecting.
All right, come as a big shocker over there. That's the management of JSPL. In fact, they've now moved the Delhi High Court against the cancellation of their bids. Ashmit has been tracking all that action for us in court. Ashmit, what more are you picking up?
Well, again, what we're picking up is that JSPL, as you pointed out, had moved to Delhi High Court. There are a number of concerns that they've cited. JSPL, for one, argued that the order that they've been served with respect to cancellation of these blocks in question did not have any explanation, any rationale that was offered by the government for why the blocks were cancelled. That's one of the primary concerns that they've raised. They also go on to say that the mechanism that was adopted for arriving at the bids was a mechanism that was put in place by the government, that it's a consistent mechanism, that the bids have been credible and should be accepted by the government. The government, on its part, of course, continues with its position that, in fact, there's a pattern to the various bids that were received for coal block auctioning, and that bids offered by JSPL was an outlier with respect to this pattern, and hence requires re-examination towards that end. We're also picking up from reports that perhaps the government has moved ahead in terms of allocation of these blocks in question to Coal India Limited. So we're getting unconfirmed reports at this point, which could have a further bearing on this matter, which we understand we'll just begin hearing in just a few minutes from now. Back to you.
All right, Ashmit, thanks so much for that. Well, Nigel is still standing by. Nigel, what are the brokerages making of these developments regarding JSPL?
Well, JSPL was the stock in focus in today's trading session. It opened down by close around 10%. It was down even 14% intraday, but it recovered a goodish bit from the lows of the day to end with a cut of around 7%. That's on the back of news that the government had gone ahead and cancelled various coal blocks that the company had won in the Schedule 2 as well as the Schedule 3 coal block auctions. In Schedule 2, remember, they backed the Gare Palma 4, 2 and 3 coal blocks at a negative bidding price of 108 rupees per ton. And in Schedule 3, they backed the Tara coal block at a negative bidding price of around 126 rupees per ton. Now, brokerages came out with their notes today, and City for one, they were factoring in the worst case scenario. They were assuming that any which ways JSPL will have to get their coal via the e-auction or via the import route, and the blended cost of fuel that they had factored in was around 2 rupees 17 paisa per unit and 2 rupees 40 paisa per unit for the next couple of years. They say even the worst case scenario, the blended cost of their fuel shouldn't go beyond these rates, so they're already factored in the worst. Morgan Stanley, though, they say that post these cancellation, the possibility of earnings as well as EBITDA cuts, that really comes about. And they say that since JSPL cannot source any of its coal via captive sources at present, it could increase the coal cost by nearly around 20 to around 25%, while the EBITDA could take a hit of around 15 to around 17%. They say that JSPL could go ahead and in fact bid for the Utkal B1 as well as B2 coal blocks, but those blocks are much smaller than these blocks where the bids have been rejected. Kotak, they have suspended coverage on the company. They've assumed 3 cases. In all 3 cases, they have assumed that in fact the steel business will get its coal requirement via the e-auction route or via the import route. Now, for the power business, they have assumed three various scenarios. Scenario 1, they state that the power business, the entire 3,400 megawatts, will get its coal via the e-auction route. If that is the case, then their EPS for FY17 will be at around 20 rupees per share. Scenario 2, they're saying that maybe 2,200 megawatts of their power plant will get its coal via the e-auction route, and the remaining 1,200 megawatts of their power plant will get its coal via the linkage coal. If that scenario plays out, then they say that in fact the FY17 EPS should be at around 24 rupees per share. And finally, they say suppose JSPL's power plants, they get around 1,200 megawatts is fed with linkage coal, and the remaining 2,400 megawatts is fed via captive sources, then the EPS could balloon up to around 31 rupees and 50 paise per share.
Okay, Nigel, thanks. So that's plenty of uncertainty surrounding JSPL. However, the 2 stocks that did rally very sharply in trade today on account of the government's decision regarding coal blocks were Sesa Sterlite and Usha Martin. Now, Sesa Sterlite spiked nearly 2% after the government rejected Balco's bid for Gare Palma 4/1. Meanwhile, Usha Martin spiked close to 15% as the government accepted bids for the Brinda and Sasai coal blocks, which were won by the company. Sonia?
All right, well, SpiceJet was the other mover of the day, so we'll be rallying close to 6% after the company announced that it has been able to arrive at an out-of-court settlement with one of its Irish lessors. Remember, this was the company that had dragged the budget airline to court over non-payment of dues. The lessor had sought deregistration of 6 of its 17 Boeing aircrafts leased to that airline. Wilmington will now withdraw the petition filed in the Delhi High Court. However, by the end of the day, the company had managed to pare its gains, or the stock had managed to pare its gains, settling down with mild gains of just about 1% or so.
All right, on that note, it's time for us to get into a quick break, but coming up on the other side, Sudarshan Sukhani will be joining in for a technical chat. We'll also get you some trading ideas for the remainder of this week.